Welcome, ladies and gentlemen. Welcome back to the Terrence Cash Show. We're excited to have him as a guest here in Orlando at the Citrus Club. On a previous show, he explained how to protect your assets. On today's show, we're going to talk to him about how to create wealth. This is the pivot that one must make. It's not about necessarily even working harder. It's about working smarter, not necessarily being smarter. For those of you that may have missed the last show, Terrence Cash is the chairman and founder of the Greenlight Corporation, a group of companies, and is a seasoned serial entrepreneur, accredited private investor, coach, author, and philanthropist with over 25 years of experience in success and in business. Welcome, Terrence.
Thank you, Kooge. My pleasure to be here.
First question, how did you discover the secrets of creating wealth?
That's a good question, Kooge. It was an iterative and progressive project and process. You know, to learn these secrets at one time is almost impossible unless your parents come from money and they know these secrets. Otherwise, they're almost elusive and not things you'd find, you know, in a textbook or on the internet, especially in one place. Basically, I went on a journey, and so the wealth creation secrets was a journey I went on for, you know, over 20 years. That journey's not over, but you know, the hardest part of that journey, which is getting to, you know, first base, and then second base, and then rounding the bases. Now it's all about my clients' financial success and trajectories more than my own. But the journey started with basically launching a business. So that was the first part. Very difficult to learn about wealth creation, you know, behind the desk of a 9-to-5 job. Not impossible, but you have to really know the right people. I always tell my clients that there are actually 7 principal types of wealth. Equity wealth, which is basically where Mark Zuckerberg is right now. Mark owns, I don't know, 18%, 20% of a multi-billion-dollar company. So 18% of that is billions of dollars. So that's called equity wealth. Then you got post-equity wealth, which is essentially where Bill Gates is today and essentially where I am today. In other words, Bill Gates, most people don't know this, has sold most of his holdings, significant holdings in Microsoft over the years, in exchange for obviously tens of billions of dollars. So he's post-equity wealth, and you guys know from my story during the first half in the previous show that, you know, I sold my business for north of $15 million. So that's post-equity wealth. Then you have corporate wealth. So the few in this room who are blessed and fortunate enough to have those great corporate jobs that are paying $1 million, $2 million, $5 million, maybe a managing partner of you know, a hedge fund or of a major accounting firm. That's what we call corporate wealth. You have inherited wealth, and I guess everybody knows what that is. Somebody's got to die to get that, right? So that's not a very consistent way to accumulate wealth. You have fortuitous wealth. That's hitting the lottery or sweepstakes. You have celebrity wealth, everybody knows what that is, and you have illicit wealth. And again, I'm not promoting illicit wealth, I'm just saying that some people have gotten rich or wealthy from illicit businesses. You know, even now, respectable, legitimate families like the Kennedys started in what? You know, moonshine, right? So those are the 7 principal types of wealth, but they all have their basis and as a common denominator in one major area. That is, all of them have either a significant relationship or significant ownership in a sustainable, successful, and profitable business. Even the sweepstakes, because most of you hopefully know, if you don't, every state in the union is a corporation, guys. Every state in the union. So even if you hit the Powerball, multi-state Powerball, like I said, significant relationship or significant ownership in a successful, sustainable, and profitable business. So that's where the journey started for me, Kooge, opening my business and then being exposed to these high net worth individuals and enormously successful entrepreneurs.
Now, why do most people, even with high incomes or sudden fortuitous wealth, or a sudden fortuitous income, using your terminology, not create wealth?
Well, again, Kooge, another good question. It's all about your mindset, perspective, and relationship with money, not the money itself per se. Money's just a tool, right? It's a medium of exchange, right? It's a choice you make. Whenever you hand a dollar to somebody else, you're making a choice, right? You're selecting one option, opportunity, or activity over another because there's an opportunity cost. The dollar you give to McDonald's for the 99-cent menu is the dollar you can't give to, pay as a tip when you get your car washed. So you're making a choice. But it's not about the money, it's about your mindset, first and foremost. The rich have a very different, much more enlightened mindset. And again, from my previous show and talk, you see a little glimpse of what that mindset is. It's dramatically different. It's not the same old thing. It's inverted, it's counterintuitive, and it's hidden in plain sight. Your perspective has to be a lot broader. A lot of my clients come to me with narrower perspectives. So we look to broaden that out because sometimes they don't know what opportunity looks like. It's all about seizing opportunity and fending off threats. That's the secret to staying in business successfully forever, in perpetuity. You have to be able to consistently seize opportunities and be able to consistently fend off threats. So that's the major thing.
So that leads me to cut to the chase. What is the Greenlight approach to creating wealth?
Well, see, we have these gerbils and carrier pigeons, and they each have $100 bills. They just drop them off at your home. No, I'm playing, guys. Greenlight approach, like I said, builds on our foundation of mindset, perspective, and relationship with money. The first thing is you got to learn the principles, right? But the way the coaching goes, excuse me, it's not just you get this academic, informative discussion, and it's something you put on the bookshelf. It's actionable. So in other words, a typical coaching session, which is about an hour, and for my everyone but my VIP clients who pay for travel and they're paying $1,000 an hour, we do confidential and private one-on-one coaching conference calls. So we have a state-of-the-art conference bridge. You dial into the bridge. I dial into the bridge. We have about 8 master coaches. But one of the things I had promised Kooge, and in certainly deference to Jonathan Blout's efforts to get you all here, that I would be the voice on the other end of that phone. It would be one of our 5 other master coaches. So that being the case, a discussion begins. I lock out the coaching session so you know it's just me and you. And there's no one at Greenlight's level that does one-on-one coaching at the price point we do it. My whole philosophy was, when I retired, when I wanted to bring this to the masses, look, if you're making hundreds of thousands of dollars or millions of dollars, you're going to pay close to $1,000 an hour on a retainer because you can afford it. But for those in the audience that can't and desperately want to have an opportunity to get exposure to these principles and strategies, you can still have. I don't want to perpetuate the same system that I'm trying to improve on, right? So we wanted it to be a modest investment in time and money, as opposed to a major investment. Again, it's prorated for your net worth and income or cash flows. But our system revolves around, like I said, first and foremost, getting you exposed to the principles. And I exposed a few of the principles, we'll expose a few more during this show. But to get you exposed to the principles. And again, as you see, the principles are in metaphor format. They're simple to understand, they're not complicated. What the rich do is complex, guys. It's what I call financial physics. Now, being an engineer who loves physics and got great grades in physics, you know, I appreciate it. It's difficult, it's dense, it's complex. They pay hundreds of thousands of dollars or millions of dollars to top advisors to do that. But our system, you can get the same results for a modest investment in time and money. So we start there. Okay. Now again, there's two answers to that. It depends. If all you want to do is create a trust, a estate, an LLC, or a corporation, Greenlight is not your company. But if you want to create one of those artificial people that's in the right structure, that's employing the right strategies, and executing the right tactics, then you come to your friends at Greenlight. Otherwise, you just go to LegalZoom and you'll have something that'll be in the wrong structure, it'll have the wrong tax treatment, it'll have the wrong capital structure, you won't have any strategy, so you say, what do I do with this damn thing? Terrence Gass said this is the secret. Yeah, that's the perspective is the beginning of it. It's not, guys, it's not magic. You know, it's not like, okay, all I gotta do is, you know, form one of these artificial people and then I got it. I got it. I paid $600, I got this special package for $1,000 and we're good. No, you have to be coached on how to use it. Matter of fact, what we do is, it's with some of our solution suites. We have dozens and dozens of different solutions and they are client specific. But probably our two most perennial, and we didn't even get into this yet, Kooge, maybe during the second half. Our two most perennial favorites are the New Lifestyle Business Startup Solution, where we teach and mentor people how to run their life as a business, which includes paying the minimum legal tax. That's a construct we made, we created that. That doesn't exist anywhere but Greenlight. Another perennial favorite, and it includes a free incorporation. Why do you think it's free? Because some clients would argue about, well, you know, I can get that cheaper at LegalZoom, I can get that cheaper at the incorporation company. So can you get it cheaper than free? Because we take it off the table. The first year of Greenlight, we didn't do that. We say, okay, go to the incorporation company, go to LegalZoom, get it done, then come back and we'll do the coaching. And these misfits, misconstructs of corporate entities said, well, why are you an LLC? Well, they said over at the corporation company to just be an LLC. And I says, you in real estate? They go, no. You have some funky corporate partnership structure where all the partners are actually artificial beings themselves. No, then you're probably not exploiting the best uses of an LLC. And did you know that the IRS doesn't formally recognize LLCs? Not a bad thing, guys. You just got to know what it is. Okay? An LLC is a hybrid. It was created 35 years ago, and it combines some of the advantages of a corporation with some of the advantages of a partnership. So that's its legal structure. Has nothing to do with how it's treated tax-wise, which is called its tax treatment. So the IRS doesn't legally recognize it because it says, okay, Mr. LLC, how should I tax treat you? Should I treat you as a corporation? No, you're not a corporation. Should I tax treat you as a partnership? No, you're not a partnership. So what the IRS actually does, they give you three choices. But 99.9% of the LLC members, the owners of an LLC, are called members, guys. Don't know that. Matter of fact, you don't have to show me your hands. Those of you who have LLC, I'd say 80%, maybe 90% of you are in your default tax treatment. If you're a single member LLC, you're the only owner, you're a disregarded entity, meaning you're being tax treated as a sole proprietorship. Okay? Maximum legal tax. So you paid all this money for the LLC legal structure, and on the tax treatment side, you could have just registered for $45 at the county clerk and be done with it, right? And if you are a multi-member, you are being tax treated as a partnership, which is like two sole proprietorships, married, filing, joint. Okay? Not good. Okay?
Excuse me, my name is Perry Smith, and I'm in the financial services and insurance business, so I can actually try to help you to protect the assets too. But my question to you, Terrence,
yes,
is you're doing very well right now. Since you cashed out for this 8-figure income or assets, have you had any downturns in your life or in your business that where you had to fight back to get back to where you were?
That's a great question. Perry Smith, right?
Yes.
That's a great question, Perry. You know, being an entrepreneur is like a high wire act, right? It's like a high wire act. There's no such thing as you don't have some disappointments. Because if entrepreneurs, I've had entrepreneurs that told me, I've never had to worry about payroll. My answer, then you never had any payroll. I can tell you back in my computer business, which was doing about $1 million every 10 days. Somebody asked me, what was your best day, sales, revenue in one day, single day? I said, I remember it like yesterday. I said, because it was preceded by my worst financial day. The day before, I had $1,000 in my corporate bank account. Not any more zeros, guys. Don't think I'm being cute. $1,000. And I remember one of my VP of sales, and I was encouraging him, coded, beating him to bring in some money. And I hinted there might be a problem with payroll. And he was making like $7,000 a month base salary. I had acquired him from Verizon Enterprise division. And so that was like 2 weeks ago. And so that's coming up on payday. This is Thursday, payday's tomorrow. And so he just wanted to make sure everything's gonna be fine like it always is, right? Because they don't see all the drama. And you guys have payroll, know what I'm talking about, that goes on before payroll, So he said, well, is everything gonna be fine? And I said, well, what do you mean by fine? We have $1,000 in our corporate account. He said, good Lord, what are we gonna do? I said, I know you better sell. I know my job's already spoken for. He said, so what's gonna happen? And I said, well, God's gonna show up. He said, what do you mean? God's gonna show up. See, at your core, I'm not a religious person, but I'm a very spiritual person. And you must be working on your core while you're working on your money. Money only makes you more of who you already are. So if you are generous and kind and positive, you come into some money, you're gonna be more generous. You're gonna be more kind. You're gonna be more positive. But if you don't have your core worked on, you are coming to some money. You know what I'm talking about. You come into some money, you're gonna start abusing people, right? You're gonna get arrogant, you're gonna be vain, and I tell my clients all the time, look, and I don't come from a religious reason when I talk to people about pride, ego, arrogance, and vanity. I say, look, pride, ego, arrogance, and vanity cost you. You pay a premium for that. They'll make you do things in business you shouldn't be doing. And they will discourage you from doing the things you should. So they are not good for business. So it's not a morality thing, it's just they're not good for business. I've seen people turn down tremendous opportunities because of pride, ego, vanity. Some of the richest men I know, 700 million, 800 million. I was part of a private investors network in New York called the Tri-State Penn Private Investors Network. And I came into that, you had to be worth $5 million. I was like $7 million at that point. Let's just say most of the people didn't look like most of the people in this room, okay? And so I was the only one in the group, and they thought I was mute for 2 years. For 2 years, guys, I didn't say a word. I took notes, I listened, the worst place to take me, guys, if you're in a hurry, is a bookstore, right? That's the worst place to take Terrence Cash. Because you're going to be there a while. Get a big glass of water. Matter of fact, get a sandwich, water, chips. Because we're going to be a while. I mean, it's true. That's all about your success formula. Look, if you want me to tell you who you are and where you're going, tell me what books you read. Number one. Tell me who you hang out with, who you spend time with. And tell me how you spend your time and your money, and I'll tell you who you are and where you're going. So if you're not putting the right things in, to what? Enhance and establish your core, then the money can come and you're going to be abusing people. The money will come and you're not going to be in alignment with that money.
I'm Terry Jones, very proudly the president and founder of a local nonprofit.
Hi, Terry.
We would love for you to adopt us and help us find wealth and do more with our funding that we have. Are any of your principles applicable to nonprofits?
Terry Jones, yes they are. Great question, by the way. I have a real love for not-for-profits. About halfway through my previous entrepreneurial journey, I was on the board of directors of as many as 9 not-for-profits. Probably the most well-known is American Red Cross. So I love not-for-profits. I love what they stand for. Funny enough, Terry, on the development side of things, one of the biggest fundraisers, at least in the New York area, and maybe down here, is golf outings. You make a tremendous amount of money on a golf outing, as opposed to the fancy dinners, right? Golf outings you can get, my company was perennially title sponsor, ball sponsor, hole sponsor, dinner sponsor. You're talking about $25,000 to $50,000. So if you got 10 sponsors that are paying at least $25,000, that's $250 right there. And you know, to rent plus she's a not-for-profit, so they're going to give her a great rate on any course in the area. So let's say it's $5,000, $10,000, let's say it's $10,000 to put the event on. So you got $250 just from sponsors. Then you got people who are paying for foursomes and even individual. My average price was like $1,000 for for an outing. Now we were sponsors, so I got like 2 foursomes. But the point is, golf outings are an underused development venue. But there's other things. There's all sorts of things you can do that kind of is creative. And so I can talk to you offline about that.
Terrence has written a book. Somebody asked about knowledge and wisdom. And he's going to read some excerpts from that book. What is the name of your book?
Okay, the book is called No Personal Gain. The subtitle is, basically the subtitle we had for the invite, no one ever said the road to wealth would be simple, pregnant pause, until now. So that's the book. Now, let me just tell you about the construction of the book while I'm pulling it up. Basically, I wanted to make a book that was different in the self-help, personal finance area. I didn't want the same old thing. So the construction of the book is that every chapter begins with an anecdote section before I get into the principles and the lessons and the don't do this, the don't do that. So I modeled it basically after the Bible, right? So I'm a Christian. So how did Christ do it? So what he did was basically, he didn't just say don't do this, don't do that, right? Everybody would have tuned out. He said, let me tell you a story, right? Isn't that what he said? He said, let me tell you a story. He told you a story, and there was an abject lesson in the story, and from the abject lesson, you were like, aha. And then he said, okay, don't do this, don't do that. So this is the anecdote section of the introduction, called a second opinion. Now think about that. With the normal use of that phrase is usually what in a medical situation. Usually, unfortunately, you probably heard some bad news, right? Hopefully that's nobody in this room. And then when you go for second opinion, you're always going what? For some better news, right? More optimistic news. So keep that in mind. I took 2 weeks just to come up with the names of the chapters, which I'll share with you a little later as well. So this is the anecdote section from the introduction called a second opinion. Don't get old, y'all. I got bifocal contacts on and that's true. Okay, here we go. I had been living and working in the Suffolk County border town of West Sayville since one day in September 1981. It was a sputtering, subdued section of strip mall retail shops and tree-lined homes, mostly popularized by its elegant and stately public golf course, nestled on the coast of Long Island South Shore, just 1 block away. It was here in 1994, before the defense industry bubble burst and an illegal eviction, oh yeah guys, I got illegally evicted, would rearrange my fortunes and destiny to Westchester County. That I considered carefully a New York Times classified ad for something that was, up until that point in time, ridiculous altogether. A full-time day job with the competition. The night before, I had tried unsuccessfully to convince my then best friend, Gerald Nolan, that my sudden, urgent request for employment was merely a matter of changing strategies. And why, in order for my dreams to be realized, I was going to need regular bi-weekly paychecks. I'm not quitting and giving up my dreams after striving so hard for 4 years. It's not in my DNA, I told him. More by way of admission than bragging, then explained that I was completely out of money, with bills and arrears, and how poverty acquires romance only when escaped. The response of my childhood friend was as humorous as it was unforgiving. You are ruined, my friend, and your return to wage slavery is a cruel and twisted joke that will never work for you. On the other hand, perhaps you should just run back to the cover of anonymity, stagnant wages, and periodic layoffs before you realize that the only way most likely to produce financial freedom is having your own business. Whoops, too late. But when I sat with him 2 years later in a small silver and gray booth at the White Plains Coach Diner, and as a testament to the resilience of the human spirit, I couldn't even evoke the past, which, for better or worse, always loses to the future. And the power of this new future is that it requires only modest success to get you what you want, which is not necessarily fame or great fortune, but rather financial freedom measured in happiness and money. And through this freedom, gain an upward leap in opportunity, choice, and control previously unthinkable. The narrative of rapid ascent made possible by this future is anchored in a revolutionary new framework, approach, and way of thinking about business for creating personal wealth and success called no personal gain. The answer for its success lies in the hidden truth that although there are many ways to achieve personal wealth and financial security, only one is most likely to succeed. This book reveals what this proprietary business planning framework and metaphor for wealth creation is, how it works, and why it is the perfect solution in search of the right problem. This proven approach shakes up the traditional entrepreneurial rites of passage by rewarding ordinary people with substantial financial results after a modest investment by them in time and money. So that's the anecdotal section of the introduction called A Second Opinion. And then I tell you, don't do this, don't do that. So that's it.